Welcome to this week's video where I discuss what I believe individual investors need to know over the next 5 to 10 business days before they make their investment decisions. This week, the head of the Federal Reserve, Jerome Powell, gave a speech. Why is it important for investors to understand what he was saying? What sectors of the market benefit from his comments? And third, Canadian bank stocks. Are they still a good core holding for your portfolio? This week, Jerome Powell, the head of the Federal Reserve, gave his famous speech at the famous location in Jackson Hole. He discussed bond tapering and perhaps talking about tapering or buying less bonds, U.S. government bonds, by the end of the year. Now, this would mean that not as much money will be pumped into the U.S. economy. However, what he also said is that this is no indication of him perhaps raising interest rates anytime soon. So individual investors got extremely excited. The stock market went up to all-time highs once again because individual investors believe that interest rates will remain lower for longer. A very nice saying that we've come, to learn over the last few years. Lower for longer means higher stock markets for longer. And therefore, individual investors should be very excited by his comments. Now that individual investors understand that the Federal Reserve will not be raising interest rates anytime soon, and we also believe that the Bank of Canada will hold that as well, what individual sectors will benefit from this type of policy? Well, as we all know, tech stocks. We saw a huge run in tech stocks at the end of this past week based on Jerome Powell's speech. We saw tech stocks right across the board benefit, whether they were chip makers, social media stocks, or software stocks, cloud stocks, you name it, they went higher. But overall, I think the overall market will benefit from lower interest rates for longer. So if you're an investor out there wondering when the next pullback will be, very hard to decide that. As when interest rates remain low or are low, you tend to see a lot of individual investors coming in and buying the dips when they happen. And therefore, we tend to not see these big pullbacks as many people fear. So going forward, I think it's a green light for investors. I think you can invest in many different sectors and just try to pick the ones that represent obviously the best value. And if you can earn a dividend while you wait for the growth, that's a good recipe for success. Canadian bank stocks, they've been in the news for good reasons and not so good reasons as of late. All the major banks in our country have reported fantastic earnings. And there is the assumption by many analysts that these banks will also increase dividends in the not so distant future. So these bank stocks have had a tremendous run higher. Are these still good value? Well, that's for everyone to decide. I believe that over the long term, Canadian banks do work for Canadian investors and international investors as well. Still one bank stock, coincidentally, that still pays over a 4% dividend, and that's Scotiabank. And I know that many individual investors have moved towards this name. Lately, the Liberals, Justin Trudeau, has mentioned that if he were to win the election, that he would increase taxes on our major banks. This is something that a lot of investors are concerned about. In my opinion, perhaps in the short term, these banks get a little bit less expensive based on a new tax that the Liberals would bring into place. However, over the long term, I think these banks will do just fine. They are the bloodline of our economy. They are one of the safest and best quality names in our country, the largest companies in our country. And I think over the long term, will continue to produce good quality growth and great dividends.